Welcome back. Supplies of the world's critical commodities are facing increased risk in the minds of some experts due to climate change. That's not new, but the results of the recent U.S. election is another wild card. Let's bring in an expert who's been talking to Canadian companies about all of this. Elliot Cappell is National Climate Change Leader and Partner at PWC Canada. Elliot, thanks for coming in.
Thanks for having me.
First of all, you've been talking to Canadian businesses about the U.S. election. What are they saying most recently?
Well, the biggest question is uncertainty, right? When you think about investing in clean energy or electric vehicles, these tend to be longer-term investments. What we saw in the United States with the Inflation Reduction Act is that de-risked a lot of investments. We saw $70 billion of investment go in about 18 months. Take away the IRA, look at the volatility in energy prices, consider the risk of tariffs. Suddenly you have the opposite environment, and that's not very good for investment in new technology.
Trump has pledged to remove the subsidy on electric vehicles. How much of a factor is that?
That's going to have a factor for sure. I mean, electric vehicle sales we saw some research this week, kind of cresting out in terms of demand, but ultimately most people are not considering the subsidy in the purchase of their vehicles.
Is there any takeaway here for instance, lithium mines or the development of key metals around the world or here in Canada?
Absolutely. I mean, all the critical minerals that are part of those batteries or part of those supply chains, they're under threat both because there's so much demand for them, but also because they tend to be in places which have high physical risks from climate change, like drought or heat. And so we've done some research recently that's shown that quite a significant portion of the world's supply of those minerals is actually under stress.
What's that mean to companies that produce it?
Well, there are a number of things that they need to do. First is understand where their risks are. In some cases, if their supply is secure, that's an opportunity for them. Obviously thinking about adaptation, what they can do to basically reduce that risk or to capitalize on the opportunity. And then lastly, to invest in new technologies. So for example, we see a lot of people in the battery supply chain who are trying to use less cobalt and less lithium so they can get away from this problem entirely.
Governments in Canada have been subsidizing in a big way battery production, Ontario and Quebec, both. What are the implications for those companies that are now setting up here in Canada?
Well, I think it's a long-term play for them. You know, they're looking at 2035, 2040, when generally speaking, most new vehicles or all new vehicles will be electric. And so when you look at the various projections, both of the supply and of the demand of those materials and the inputs, there just isn't enough to go around. So there's going to have to be new technology, more efficient batteries, battery recycling, and so on.
The COP29 conference just closed, and the big headline reported was that a figure of $300 billion was agreed to. That's a transfer of wealth from the developed world to the developing world to help the developing world decarbonize. The developing world wasn't very happy with that total. It wanted, countries in that part of the world wanted multiples of that. Where do we stand on that now?
Well, ultimately, that sounds like a big number, but really when you take into account inflation, it's not a huge change. And when you think about even just the adaptation side of adapting to the physical risks of climate change, it's wholly insufficient for global adaptation, not to mention transitioning to a low-carbon economy. So I think the biggest thing that we can take away is that they did get a deal done. There was a moment where we thought we wouldn't get a deal done.
Right.
It's now all eyes are on next year's conference in Brazil, which is expected to have more fanfare.
What does this mean, again, to Canadian companies who are watching their government negotiate in this way and the companies who are under pressure to reduce their own carbon footprints?
I think there's going to be a lot of pause right now, right? A lot of pause to look around, see what's going to happen with various climate-related regulations, including the SEC's rule, which we all expect to be pulled. What will Canada do? What will Canadian regulators do? I think we're really in a wait-and-see mode.
What rule at the SEC are you talking about? You expect it to be pulled?
Yes.
Is that a Trump? Is that because of the new incoming administration?
Indeed. There was a proposed rule for companies all public companies in the U.S. to have to disclose their emissions. Now, we still see at the state level, for example, in California, and potential rules coming out in New York that will still require state-level disclosures. But the SEC would have been a bigger issue, clearly, for Canadian companies.
Thanks, Elliot, for being here.